interesting how ISO has picked up and what's happened to the other legacy industry formats that are out there. Standards that the observations that we have is with the adoption of ISO, just from the various treasury management systems, ERP systems, how that integration, it's so important from a cost perspective to have that partnership and have that support across the various ERPs with the standards. The data, of course, we're going to hear more about the experiences there, but really that rich data element is just going to be critical from a straight-through processing, but more importantly, a straight-through reconciliation perspective. The rich data really also gives banks the opportunity to provide ancillary enriched services to the corporate, so very, very key. Interestingly, from an integration trends perspective as well, is the growth in the cloud solutions that a lot of the treasury management systems are providing to corporates. So if you are using a legacy system, what the various ERP providers have out there to help you translate into ISO. So we're seeing the growth in those solutions coming out. And then of course security, having just with an additional emphasis on security and integration is certainly something that we're seeing. Okay, I won't go too much into the slide. Oh, actually, that's the wrong slide. So we talked about our observations at Bank of America. And interestingly enough, this gives you a really good picture of where we see the file formats moving away from what we considered kind of the industry standard, particularly in the US X12 and in Europe, the UN EDIFACT format, how those setups are in decline, and the ISO as a format is on the rise. So 2015, with a population of 536 clients, we had 50% of those utilizing ISO, and that's an observation we've seen particularly in the US, but the other observation I wanted to call out too is across the universe of setups over the last couple of years, 4,000 setups in all. In 2014, 2% of those setups are ISO. Now there's 24% of our global setups are implementing ISO, and that is with a subsequent decline in the EDIFACT format, the X12 format, as well as various flat file formats that we have supported in the past. So we are certainly seeing more and more adoption in ISO across our global corporate world within the bank. And just calling out again, just various trends around the adoption across the various verticals. So I guess the first question I wanted to ask, and I might just in the interest of time, I think I'm going to skip over this question. Didn't realize they were going to be scanning the badges at the front, but I was interested in finding out, and I think we all would be interested in finding out who's actually in the audience. Do we have a strong population of corporates, FIs? Do we have any of the vendors in the audience? And hopefully we don't have any of the fraudsters, because I know there's going to be a different session on that this afternoon that they might be sneaking into. But anyway, so I think I'm going to leave that question. I'm not going to poll it because I think we got it with the badge scans. But the next question I do want to ask is, it would be interesting to know whether you are a bank or whether you are a corporate. What stage of adoption are you at today? So if your company. So question, are you fully adopted? Are you currently implementing? Are you currently evaluating the implementation? Or is it not even in your line of sight? So that I would be very interested, I think we all would be very interested in finding out what's going on in your world right now. So that's the first question. I think everybody knows how to use the polling questions. It's in the presentation. If you go onto your app, go onto your device and go into the presentation, you'll see that first polling question. So that would be great if you could answer that, and we can go from there. Okay, 19 answers. Well, there's more than 19 people in the room. So is anybody else going to answer, or is this starting to pick up? Okay, 21. Okay, I think that's, oh, nope, 23 now. Okay, so that's interesting. So the evaluating is seems to be the most popular here, with implementing as well. So that's interesting to note when we're talking, when we go through the case studies. Okay. Okay, good. Good. So I'm glad that we're not seeing much of 4, which is good. Okay. Okay, so with that, I am now going to turn it over to Tom. And Tom is going to kick off and tell us a bit about the case study for Suncor Energy.
Sure. Thanks, Maureen. So I guess we've been on this journey for about 5 years in implementation. For maybe 2 of those 5 years. We really set out with the standard and trying to realize on the promise of the standard. And I've dealt with it, with my intro, and thanks for that. I've been dealing with different standards for many, many years with system vendors and other corporate treasuries I've worked for, and that. The ISO standard is really I'm going to say the first standard that's had the promise of true getting us to being a bank agnostic partner. I'm not sure, over the years we've got all these point-to-point legacy solutions in the company, and we set out on this journey to really drive, I'm going to say, standardization within Suncor and standardization with our banks. Because at the end of the day, I don't want to get bogged down in connecting my company to the bank to transmit data. I want to do the value add activities of finance and treasury and let everything kind of operate in the background. I know it sounds a little bit like a dream, but we are well down the path of that, of actually realizing on those benefits. And that's one of the things that, if you're a corporate in the room, I would, and I've had this conversation with Cory before they kind of launched off into their journey, and I wish that we had, wish we had done this first, but because of the timing of when we started, we didn't have the luxury of doing it. But halfway through, we did what we called a harmonization project. We got all our banks on the phone, and we circulated a spreadsheet with the standard, with the file formats that we wanted to. And the intent there was to actually drive a Suncor standard across our banks. So we ended up with about 3 to 5% of the standard where it's nuanced by bank, which really enabled us to drive efficiency down through our IT department, because now we're configuring 95 to 97% of the files formats the same way, and we only need to know I'm going to say a handful of data elements that are unique to each bank. And in lots of cases, what we found was where you thought there was through that harmonization effort, you thought there might be a unique characteristic to the standard. One bank maybe required it, the other bank didn't require it. It appeared to be unique, but when you really pressed on the one that didn't require it, the question is does the file fail when you pass it? And often you could actually pass the data, the file doesn't fail, it gets processed, no big deal. So then you move on to the next data element, and by the time we were done, it was very consistent across the banks, and that's where I would start. I jumped to the lessons learned. That's where I'd start if I was to do this again. But it really is, I'm going to say, driving at internal efficiencies and support issues, and to use the total cost of ownership word or words, that we're really trying to get the costs out of our IT and treasury department, and that's what I can say the promise of the standard has. So we've implemented now in Europe. We're about 80% implemented in the U.S. And we probably launching a project next year to implement in Canada, because fortunately our main bank in Canada will accept the standard already. So we're hoping to be able to actually drive that right through all of our cash management banking partners. The biggest, issue that we faced, other than the harmonization, is really the collaboration with IT and making sure that we were moving in lockstep, that they shared the vision that we had of driving this. You'd think with a standard like this, and I've had this conversation internally many times, is that because we're actually driving down our support costs from an IT perspective, that IT should be leading this initiative. But it took probably 2 years to actually build momentum internally to get IT to the point where they understood the benefits and got on board with implementation and funding, and now we're off to the races. I mean, current economic environment has slowed us down a little bit, but we will get there in the not too distant future. And once we've established that standard, then it's easy to bring on banks, or take banks off and move back and forth between different relationships. I mean, you can focus on the banking relationship versus the IT aspect of partnering with a bank. So, and if I speak directly to the banks in the crowd, make it easy for your customers. The standard is not a competitive advantage from a corporate perspective. It's not a way that the bank is going to differentiate themselves. I've had this conversation with Maureen many times. It is a standard. It's just kind of table stakes. One of the things probably took me a little bit of time bringing my one bank to the table was they're not used to working that closely with other banks in the background and getting them all on a conference call and talking to each other and sharing the information via a spreadsheet. But once everybody warmed up to the idea, we were able to really make a lot of progress, and that's to me that's key. Is what are you doing to make it very straightforward to implement for your customers?
Interesting. And the comment, I think we think 10 years ago, and banks want clients to be so integrated, proprietary, so they stick. But now it is you show value by not sticking. You show value by supporting standardization is very, very important. Cory, I'm gonna jump to your case study, and then I think we'll open it up to questions. I've got a number of questions myself. So I do want this to be interactive, though, so please, we don't have to wait till the very end for Q&A from the audience.
Sure, so I'll maybe just piggyback off that last comment there quickly before I get into kind of the genesis of where we came from with our initiative. But that, we can call it kind of the bank agnostic view, or you can talk about the kind of competitive advantage of being so proprietary versus just being as uniform as possible. And the comment that I've made to Maureen and others is that from a banking perspective, if you truly are better and you truly do offer more value-added services and advice and advisory services, if it's easier for me to move to you, it's kind of a two-way street. If you are better and you actually do want to drive business forward, then as easy as it is for me to move to you as possible, the more likely it is for me to move. I don't want to get hamstrung into being in a situation where I'm so entrenched into something that it's impossible to move, and kind of vice versa. You want to be able to kind of dive in across the board, which diving back then into where we came from. I mean, I've only been at CP for a couple of years, but when I joined, the railway industry is fairly straightforward. It's pretty constrained, and it's got its footprint. We were, at the time, there was 6 different banks, there was 6 different connectivity standards, and there was all the full gambit of, outsourced connectivity, insourced connectivity, all sorts of different file types. So it was a pretty tangled web of complexity for something that should be fairly straightforward. And the IT support that was required to be able to, just simply connect and communicate with banks. We were still doing a lot of things very manually. So being able to rally the support to move to the ISO format was relatively easy, just from the standpoint that we were, paying a lot of excess fees to different banks because we were, in that situation where we were being a little bit held hostage and not holding everybody accountable. We were paying excess fees to third-party vendors to be able to, establish our connectivity in certain ways. So we were paying a lot of extra money there. So about $500,000 a year of savings we'll recognize just by simplifying to a simple standard, a single way of doing things. We'll also have all of the internal costs associated with the IT maintenance of files failing and the investigating of where is it failing along the chain. The more we could take complexity out of the system, the better. So for us, it was really an exercise in trying to make things simple, trying to make things as straightforward as possible. And I think when we went through our process of evaluating all the banks, in the United States, all the responses we got back were pretty much that we're fully ready to go and able to adopt this. On the Canadian side, it was, well, we can do some, maybe we can do the payment side, but we can't do the receivable side. Maybe we can do it all. So it was a little bit of a mixed bag of really what the capabilities were and what the formats were going to be, which, when we finally were able to select our partner, it made it a little easier for us because we basically just sat down and said, okay, if you're not necessarily fully where you want to be with what the formats are, here's our US bank format, basically just mirror it. So we were in an early adopter phase in Canada, very easy for us to say, well, here's what the standard is going to be. And it's allowed us to basically just sit down and just map directly with what the US bank is. So, to Tom's point, the harmonization of the file formats amongst the banks was key for us, and we were able to do it a little bit easier because we weren't involved with an entrenched standard at the time. So very, very helpful for us in that regard. And so I think that also has helped us, not even just in the ISO standard and the connection with the bank, but we are an SAP customer, and as you may or may not know, SAP can be a pretty complex animal. So going through this process with, IT was very on board because we were able to strip out a tremendous amount of the customization and the pre-programming that was done in other environments and adopt a lot more of a standardized environment in SAP as well. So just going through the whole process of migrating into this standard, getting rid of a lot of complexity and customization, and we were going to realize a lot of value in that department as well. So for us, I would say that the business case was fairly well received. We had obviously the financial value and a lot of the soft benefits we were able to realize as well, and get I think IT is a big one to get on board. So for us, it was pretty key.
So Cory, it's interesting because you've got a little bit of a different business case, or you had the monetary value, and whereas you had the value, but you had a 2-year struggle, if you will. How long did it take you to get that consensus to move forward? Because it's pretty impactful what you could measure right up front.
Yeah, so I would say that we probably spent about 6 or 7 months having the internal fight on kind of the value and the how much this project was going to cost. We have an in-source kind of IT environment, so what I would call it's kind of a sunk cost. We have 500 IT employees working for our company, and it becomes a resource allocation decision versus how much is the hard cost to us. I mean, we're paying these guys anyways.
Yeah, I think
so it's really just kind of getting yourself in the pecking order of whose project is worth more than the other. So really it was just the internal sale of kind of doing the MPV of the analysis of what this project costs and where the resources are. We were able to put up a pretty strong voice for these are the real tangible benefits that we're going to realize up front. The people savings and the soft savings and all that become a bit of a wishy-washy, and sometimes you don't really necessarily go back after the fact and say, well, did you actually reduce 10 FTE? Did you actually reduce 175 hours of people time? So when you have the good upfront hard cash savings, that helps make it a little bit easier. And then you can kind of just have that, we didn't really have a lot of the other departments that we were going to be realizing some of these benefits in, putting up their hands saying, yeah, this is really going to help us. When I look at Treasury was driving this process, and from a Treasury perspective, we probably save maybe 2-3 hours a week of time on some of just the automation of processes. It's really an AP, an AR, the end-to-end processing, the data richness, all that kind of stuff. So, a little bit harder to gain consensus from other departments. To put up a more robust business case. So the fact that we had the good hard financial savings was really a key driver, at least for us initially.
Right. And Tom, you had about a 2-year struggle to get this on board.
Yeah, and it really comes down to what Cory was saying. If you got hard upfront dollar savings, it's easier to make the business case. For us, a lot of it was based off of, well, you've got something, it's working, why are we breaking it and trying to fix it and paying? We have an IT outsource model, so we actually are paying, it's not a sunk cost, it's dollars, consulting dollars essentially out the door. So I had the exact opposite of Cory, so I had to build the business case off those soft benefits, which took a lot longer to get buy-in. As I said earlier, IT eventually bought in. It took me a long time to actually get finance to buy in from the accounting perspective, and like I say, our cash clearing process and bringing the transactions back into SAP. And that, so I just basically had to go department by department, and although we're highly centralized, our AP function is, we do have a couple of AP functions overseas in countries where we operate. We're predominantly centralized AP in Calgary, but you still had to sell it to 3 different AP departments, and it just took time to build that momentum internally and convince people that this is a good thing from a standardization perspective, better fraud controls, just all the soft benefits. I could go on forever talking about them, but we couldn't really point to this is going to save us $500,000 because we're consolidating banks. We'd already gone through a consolidation of our banking post merger. And we've gone from 35 financial institutions internationally down to one in Europe and Asia, and one in the U.S. and one in Canada. So we'd already realized a lot of those benefits, and that just extended the time to sell it internally.
Mm-hmm. Okay. So with the vision, was there pushback? I mean, you talked about just trying to navigate different standards and lessons learned on kind of pushing what you felt should be the standard. But was there actually pushback in the from the banks on the implementation? I think you're underway now for Canada, but what was the bank interaction like around all this?
The bank interaction was actually fairly positive.
Mm-hmm.
I'd say that, like I said, the one bank we had to bring to the table and convince them to, share their version of the standard with other banks, because they weren't as far down the path. I mean, it was one of our Canadian banks, and they weren't as far down the path with adoption as the global banks. So, that was probably the only, I'm going to say, resistance.
Mm-hmm.
Our global banks that we work with, and Bank of America being one of them, is their product people were already talking to each other. In fact, one of the banks provided me with the spreadsheet to start with. I didn't even have to build it out. So, and they all knew each other, and it's almost like a little product club on ISO standards. But we got them together. We got the Canadian bank talking, and that was probably the biggest point of resistance.
Mm-hmm.
But I think we're over that now, and it's we're moving forward.
Okay, great. So I think I might have a question off the back of that, and then I've got a few more. So for the banks in the room who have not adapted or are just on the verge, what do you feel is the biggest impediment to implementing ISO? For those who have not implemented or are just in the evaluating stage, is it the cost? Is it the prioritization? Or is it waiting for, well, I shouldn't say CPA, waiting for Payments Canada to clarify the roadmap for ISO? So I just would be curious to know what you feel kind of are the roadblocks. And we'll open up that polling question now. Okay. Yep. Interesting. Okay. Right. Being on the Member Advisory Council and Stakeholder Advisory Council, we've got some feedback to give to our friends at Payments Canada.
For sure.
Okay. Yes, Faye?
It's not just the roadmap for ISO, it's the modernization.
Right, the modernization. Great, yeah, good point, Faye. It's where are we going to be? Okay. Okay, thank you for that.
Before we
Yeah,
move
go
on,
on.
I'm going to jump in there,
Okay.
because I think, like Cory and I've talked about this, and from a, I'm going to say the Canadian bank's hesitation to adopt the standard, it is a fairly consistent standard globally. So there's ways to actually adopt ahead of clarifying the modernization. And I'm going to make the selfish plug for the corporates is get on that standard now, and it doesn't. You don't have to wait for clarification from Payments Canada to actually implement the standard as a bank. I understand there's a lot of back-end systems and system work to do and all that, and there's the whole modernization effort underway. But our Canadian bank, I'm pretty sure, is just mapping to old systems. They take the file and map it to the old systems. And again, that's to my point about get out of my way of doing business. Like this is just this needs to be done, and let's get on with it. Because and I don't want to come across as a kind of in a threatening fashion with my banks, but I have this conversation is that now that I'm live with 2 global banks on ISO, I can turn them on in Canada. Like I don't have to stick with a Canadian bank. It's no longer an advantage. I can move. I don't want to. There's lots of value add services that they provide us in Canada, and we've got a huge retail footprint here that we leverage our Canadian bank for that purpose. But at some point, it's going to become so painful that it's like, okay, we got to go. So.
Yeah, I agree. I mean, the standard is the standard, and I think that my experience is only across maybe a couple of platforms. Tom has a few countries and whatever, but the 97%, the 98% is probably not going to change. I mean, waiting for somebody else to tell you what to do, I think, is kind of fool's folly. I mean, we can kind of all get collectively on board. You've got some large corporates now who are adopting a standard. They're basically taking, maybe U.S. standards and global standards and forcing them into the Canadian market anyways. So, companies are asking for this. You can either, adopt something and start getting on the same page, or potentially run the risk. And I'll say the same thing. It's not necessarily a threat, but a reality that as everyone starts to get and build up more capabilities, I mean the borders start to become a little bit more irrelevant as banks start to move. Canadian banks are moving into the States, the U.S. banks are moving into Canada. You're not necessarily held hostage anymore to proprietary I guess territorial boundaries.
So we've talked about and Pat.
Can I just
Yeah, go.
comment?
Sure.
On this question and why it is not being adopted so quickly. And I'm a former banker. I worked for 3 different banks, and now I'm an independent consultant, so I can take kind of a different point, maybe more democratic. But as far as Payments Canada goes, their part in the whole evolution is clearing and settlement.
Yeah.
And the Canadian banks should really be concentrating on your needs and reporting and so forth. Tom, I wanted to ask you one question.
Sure.
It's both payables and receivables, right?
Yes.
It's all file exchanges.
Yes. Yep.
Yep.
What we haven't activated yet, because the bulk of our receivables are in Canada, is the remittance data. That the banks,
So
the
that's
Canadian banks
right.
cannot handle remittance data, and frankly, I'm suspect about who all can yet. We haven't really tried it, because that's a whole, I'm gonna say, automation project in and of itself with AR. Unlike our AP functions, our AR functions aren't as centralized. We're moving towards a centralized AR function. And once they've kind of got that people and process stuff locked down, I'm going to step in, and it's going to be, I'm going to try to, influence and make some change there.
So, and thanks, Pat. I was going to kind of touch on that a little bit myself, is that we talk about the benefits and we talk about the IT benefits and the infrastructure benefits. So let's talk about, in a perfect ISO world, the data benefits. So from your perspective, what is your vision? So we've got Payments Canada stepping in, ISO 20022 AFT standards being published, and now the roadmap for the infrastructure to support it. So what is your utopia, I guess, is my question around adopting ISO. So, let's talk about straight-through reconciliation. Let's talk about, working capital optimization.
And again, on the payable side, I think the standard is fairly mature.
Mm-hmm.
With the exception of pushing remittance data with that standard and then receiving it as well. And that really is the utopia.
Mm-hmm.
Once that remittance data is going along with the payment or the receipt, and we're exchanging it as corporates, and the banks aren't truncating information on us. So we get what we get sent to us. It is a bit of a challenge from time to time, and we're not sure where in the chain it gets truncated, but sometimes data does get truncated. So when we get a full file, it's going to allow us to, move towards what I'm going to call a true in-house bank structure, where we can do receive on behalf of and pay on behalf of structures to, again, drive standardization further into the organization, deeper, and get people out of getting emails on remittance data and then trying to reconcile and match it off. And I've got 400 bank accounts because I've got them unique by legal entity because I need to be able to know who's paying who. And so that's kind of my utopia, is to get down to like not just bank agnostic, but I'd like 3 bank accounts, one in Canada, one in the US, and one in Europe. And I don't need 400 sub-accounts. I can run that internally once the standard is fully matured.
Great points.
Yeah, I think my ad is that it's got to be a mental framework adopted by corporates as well as banks on, you hear a lot about people starting to try to adopt, well, let's just start sending a lot of better payment information. Let's really make the AP side of the world real robust, which at the end of the day is useless if you can't actually have a file format and something else on their end to actually read and use that information. It comes down to the internal fight of, AP sits in this world and just wants to make their payment process faster, and the AR world just wants to sit here and make the collections process faster. But if everyone starts thinking about how do we pass information around in a circle, how easy is it for me to, I give you a PO number and you send it back to me with an invoice, and I send you back a payment with your invoice number. You don't have to make it much more complicated than that. And if that information can start kind of getting passed around, and I think the key is you have to start thinking about it as the entire process, and get out of just operating in silos, whether it's a bank, whether it's a department internally. But I would love to have the same kind of thing as Tom of, I really only need maybe 2 bank accounts for CP, and everything else. When I set up everything within my ERP, it's all coded, it's all supposed to be where it needs to be. It's just a cash clearing exercise, and that should be pretty easy.
Wow, and then look at the cost out of that too. To us banks, less fees. But anyway, it certainly is there's a cost optimization as well as reconciliation and soft costs and everything else. Were you going to say, Tom?
No, I'm good.
Questions from the audience? Do we have any questions for Tom or Cory? Okay, I have another interactive question then. So what do I have? Okay, so I asked the bank question, so we'll move to corporates. Okay, I don't know how many corporates I have in the room, but if I have, because I didn't do a check at the beginning. If you are a corporate, when I think of ISO, I think of pain and complexity, cost, or opportunity. So let's see what everybody thinks.
Well, I'm hoping we positioned it as an opportunity.
I hope so.
We changed some thinking.
Yeah.
Okay, so you've pulled that? Yeah, it's a poll question. Okay. Oh, of the 14.
Yeah,
Boom.
Excellent. We had, what, 10?
We should have.
There's a
I'm not
few.
going to deny it's painful, but it is a huge opportunity.
I agree. I was going to say, we should have done this before and after and see how good of a sales pitch we
Yeah.
I know, that's true. That's true. Okay, and you know what? I got one more. I know we're red, but let's go to the last question. Nope. Do I go back here? All right. So if the bank starts to offer ISO AFT tomorrow, would I be able to receive data and use it in the following time frame immediately, in 6 months, or 1 year from now? So let's talk about fast tracking our ISO AFT formats. Banks are exchanging it. What am I going to do with that data? Do I have the infrastructure in place to use and apply that data immediately in 6 months, or a year or more? Question for the audience. Okay. Good. Some immediately. Good. Interesting. In 6 months. Okay, so that's I guess they've got their IT. Got their IT in line.
What I'll say about this is, like, even with Suncor, we're probably if we fast tracked AFT adoption with remittance data and had rich rich data going with it. It would probably take us a year to
Would it?
actually utilize that, because the Canadian payment system wasn't there yet. So we have not configured SAP to send remittance data. So it's going to take me 6 months to, launch a project, configure SAP, another 6 months to go live. So it would still take us a year just to add that remittance data to the file.
Right.
Because, anyways, just thought I'd add that
Yeah,
color.
interesting, okay.
Yep.
Okay.
And we have the file format, and we're sending it, and we're good to go. But
So I guess from that perspective, then, it's such an important partnership to stay in communication with, where are you, my Canadian bank,
Yep.
right? And and then where is Payments Canada,
yeah.
so that you're ahead of the curve.
Yeah, and one of the things that I've considered doing is actually finding one of our larger vendors and partnering with them and doing a similar exercise that I did with the banks from a harmonization perspective. If I can find one of our large vendors that actually is ISO enabled, then we can partner and we can actually, I'm going to say, corner the bank into making sure that data is passed in a contained or complete fashion, and because this is the catch with banks and corporates in Canada specifically, is it's kind of like, I will if you do. Like, who's going to go first with this, the data, the remittance data attached to, it's one thing to send the payment information still. We're just talking about a different standard, but it's that data richness of the ISO standard that holds a lot of promise. But it's going to be who blinks first and actually invests.
So I know that there's, that certainly Payments Canada is working with the larger vendors now to say this is the standard.
Yep.
So perhaps there's going to be an opportunity,
Yep.
for they're ready to go for you, and similar shops
Yeah, I'm hopeful.
when that happens. Yeah,
Yep,
we're hopeful.
hopeful.
We'll get
Yeah.
put the pressure on multiple people. What about you, Cory? What would you say to that?
This question here, I would probably say there would be something similar. I mean, part of it is being able to pass the information and being able to accept it, and part of it is, what information are your vendors actually passing to you that you can actually then read and ingest and match up to something that you have internally. So, I mean, some of it is just passing the information around, and some of it is relationships with vendors and how you configure it and match things up. So it's not even as simple as just, I send you a number and you send me a number back.
Yeah.
If I send you a number and then your AP department likes to use a different number because it's easier for their system, and they send me back something, I still can't use it. So, it's still a bit of more of a collaboration with partners and vendors and corporates, as much as it is even just the messaging standards. So
Yeah.
I would say, if we were to talk full end-to-end integration of everything, I mean, it would probably be more than a year. If you're talking about making baby steps and chewing through and kind of hopefully adopting things systematically as you go, you could probably take a good chunk in maybe 6 months to a year. It's probably a slow more adoption after that.
Good. Interesting. Okay, well, I think we're at the end of our session. So are there any more questions from the audience? Faye?
Yeah, so obviously we're all on board with ISO 2022. So one of the other key themes of modernization is faster payments. So I just wanted to ask you, how important is that to you?
I'm still trying to figure out how important it is to us. I can see in a retail environment or person to person where faster payments make sense, but from a corporate perspective, investment grade corporate, it's not going to make or break the fact that we pass 3 or 4 files a day or 5 files or 7 files. I don't really have that discussion. It's not an issue for us, fortunately, but I can see situations where it would be, but it's not really applicable to us.
I would second that. To our company, it doesn't matter at all. What matters is if it takes 2 days to get there, but it's automatically processed, then that's the win. If it gets there immediately and it takes my team 7 days to process it, well, who cares, right? So that's kind of where we're at.
Yeah, and just to clarify too, because of our wholesale retail presence in Canada, we deal with a lot of smaller I'm going to say consumers, small businesses, and that. So I can see where, from their perspective, there's a lot of value in faster payment if we can apply it immediately, because then their account is in good standing. And because often we won't deliver fuel if they haven't paid us. And they need the fuel in order to run their business. So I can see an application there, but that's more on the AR side. But.
Okay, thanks, Faye. That's a great question. Okay, thank you, everybody.
Thank you.
Thanks.